Ancient Rome, a vast empire, faced many challenges. But did you know that its economic woes played a significant role in its downfall? From the debasement of currency to rampant inflation, Rome's money problems were complex and far-reaching. The Roman Empire began debasing its coinage, reducing the silver content to produce more money. This led to a crisis in the silver standard. With less precious metal in each coin, the value of money plummeted, causing hyperinflation and economic instability. Ineffective tax collection and widespread corruption further crippled the state's finances, weakening its ability to govern. Constant military campaigns and defending vast borders drained the imperial treasury, pushing the empire to its financial limits. The gap between the rich and poor widened significantly, fueling social unrest and diminishing loyalty to the state. Economic decline led to a decrease in trade and production, making the empire less self-sufficient and more vulnerable. External threats, like barbarian invasions, further strained Rome's already fragile economy, leading to a breakdown of order. Ultimately, a combination of economic factors contributed significantly to the eventual fall of the mighty Roman Empire. What's the single biggest lesson Rome's financial collapse teaches us today? I'm curious to read your takeaways in the comments.